Singapore has decided to follow India and China in refraining from currency stimulus in an attempt to protect itself from inflation risk. The central bank said it plans to have a gradual appreciation of the local dollar. A Singapore-based economist at Mizuho Corporate Bank spoke about Singapore's inflation problem, stating, "The Monetary Authority is in a policy quagmire where it has a sticky inflation on one hand, and on the other it is dealing with unknown but downside risks from the external economy." Today, the Monetary Authority revealed in a statement it based its decision on the potential for higher food and consumer prices. It said the appreciating stance of exchange rate policy since April 2010 has provided some restraint on the build-up of inflationary pressures, which in part reflects supply-side constraints in the economy. The Monetary Authority believes consumer price index will be above 4.5% in 2012 and will ease gradually to 3.5 to 4.5% in 2013. The decision did not come as a surprise to one economist at the Royal Bank of Scotland in Singapore. He said tightness in the labour market will mean wage growth will be supported if not elevated, and that will be inflationary to some extent. He believes policy is very optimal and he does not see the labour market loosening. The country reported an annualised fall in GDP of 1.5% in the 3 months through September from its previous quarter. The Monetary Authority of Singapore expects GDP growth in 2012 to be in the 1.5 to 2.5% forecast range. Today, the central bank said the global economy is likely to experience an extended period of slow growth. It also stated against the backdrop the Singapore economy should continue to expand but at a modest pace in 2012 and 2013. The labour market should remain tight. The Singapore dollar, which is the world's 12th most traded currency, has gained approximately 5.6% this year. The currency has been helped by increasing foreign investment in Singapore assets that are perceived as a safe haven amid the crisis in the global financial markets. Today, the US dollar against the Singapore dollar reached a fresh 3-week low at 121.98 as the central bank kept policy unchanged. That is all we have time for today. Stay tuned to Dugascopy TV as Monica Gibson will be looking at the major economic events that shake the markets this week in the weekly wrap-up. Have a great weekend.